Hello, everyone, and welcome to CID Insurance Program's Workers' Comp's Masterclass, from quotes to renewals and beyond. Your trainer today is going to be Darby Fisher. She's our work comp underwriter. Jacob Cole is our marketing coordinator. And my name is Anae Augustini. I'm CEO of CID Insurance Programs. So let's take a look. I think we'll start with some logistics. Okay, of course. So most of you know the routine. You'll be defaulted to mute, but you of course you can hear. But your voice is important to us because you won't be able to speak, and we would just like you to pose as many questions as you may have in the chat room at any time, and we'll answer them as we go. There'll be a short survey at the end, and so please provide your feedback because it's very important to us. Now let's take a look at our agenda for the day. What objectives do we want to accomplish? So you're going to learn how to manage your workers' comp policies from beginning to end. Now that's going to be that is really important, especially with workers' comp or any kind of policy that has an audit. Let's better understand the obstacles that can arise once a work comp policy is bound, and Darby is going to take you through that process of what that looks like and how to master that. And then let's discover how to effectively obtain a new workers' comp policy and quote, and then bind it, and then learn how to hold on to your renewals each year. And it's really important to understand how to effectively compete in the workers' comp arena. Darby's going to give you a few examples of that based on size of premium and cost of business. So let's talk a little bit further about successful strategies for managing your work comp book. So you want to manage all facets of a workers' comp policy. Workers' comp is a little bit different and unique, and much more. It's got statutory coverages, but it's got a lot of regulations tied to the coverage in each state, and so she's going to talk a little bit about how to manage that process of all facets of the workers' comp policy. She's going to help with sharpening your skills with the quoting and closing and binding process. And as I mentioned, understanding the underwriting of different size businesses. Also, presenting a value-added insurance solution with competitive premiums is key. And she's going to talk a little bit about that, how to give you a competitive edge in that area. Another key to the success is efficiently managing policy activities from endorsements to audits throughout the policy period. Endorsements and audits can really cause problems, upset insureds, and you could easily lose even on a broker of record to another broker just because they blame you for not helping them manage that process. So she's going to give you some secrets to the success with that. Without further ado, I'm going to turn it over to Darby so she can get started.
Good morning, everyone. So before we begin, I just want to briefly speak on the different premium categories that are going to impact your book of business. Your small business, it's that premium range from about $2,000 to $15,000. These risks are quicker to quote. They don't have as many exposures. The payroll and employee count, it's typically lower, and there's typically not an experience mod or claims history on the policy. Most of your book is going to be built on this size of business. The medium size is that premium range of $15,000 to $50,000. So this is your sweet spot. That's that premium range that has that competitive edge as they help to build the premium volume within your book. Generally incur a lower loss ratio, so they're more stable than larger businesses, especially on the renewal side. However, they are going to require that deeper analysis in order to obtain a competitive quote. And then your large size businesses, premium over 50,000. These are going to add fast production volume to your book, but these are also ones that have a greater exposures, more accidental exposure, higher rated class codes. So they're going to require more underwriting on your end and really gathering all the information you need in order to propose a competitive quote to your insured. So as I mentioned, that medium-sized business, that's going to be the sweet spot, the most competitive, because they are staying under the radar of the big insurance retailers that want the business, and they generally have an assigned experience mod under 100%. That's resulting in a credit on the policy. Carriers are also more likely to place additional credits on the policy as well because they're going to want the business too. So the workers' comp life cycle, and what I mean by that is really looking at the policy process from beginning to end. In this case study, we're not just going to be addressing how to analyze and quote the business, but how to efficiently manage policy activity from binding requirements to endorsements that occur, audits, and then how to go about the renewal terms so you maintain that book of business. It's not just about submitting applications for a quote, understanding how to properly underwrite different sizes of businesses and exposures, and then how to properly manage them is going to give you that competitive edge over another broker. So in this case study, we're going to be quoting to renewing the account the following year. So when you're quoting this business, you want to understand how to sell the risk to your carrier. What items are going to be of value to you when you're analyzing the risk, and how does this help give you a competitive edge over another broker wanting the same business? These bulleted items give me a general idea of the business structure. I'm not going to get into the nitty gritty, but more so like what the bigger picture of what you should be automatically thinking when you get a contractor's application. So the first thing I want to determine with any contracting exposure is if this business is artisan or general contractor. That way I can get an idea of how many markets I'm able to quote the business with. So based off the insured's name, we know this is a painting exposure that falls within our artisan contractors, which we're going to have a market for. Knowing what classes of business to target is also a really good practice in building your book of business. With artisan contractors, electricians, plumbers, framers, painters, carpentry, landscaping, those are all doing really well in the market right now with a decent amount of carriers. It's not just one or two. All of our markets are kind of opening up and getting competitive with those class codes. So CID actually, we specialize in artisan contractors, and our markets, as I said, are very expansive and competitive. There are a few
Question
additional...
for you,
yeah, let's...
Darby. They're asking where to find the mod, class codes, etc. Where is the fastest, most accurate website to look up the class code?
Yes, so we're definitely going to get into that, but to answer the question, so for California risks, if I'm unsure of a classification, I always contact the WCIRB. And then for all risks outside of California, you'll be contacting the NCCI, and that's actually where you're going to gather information on their experience mod rating as well. If it's something where it's a little bit more niche and you are not sure if the classification is correct, I quite often will shoot an email to the WCRB or the NCCI giving a description of the business, and it's helpful because they'll come back and they'll tell me, hey, it's most likely going to be this classification. Or if you need information on their experience mod rating, if you have their FEIN, you can go ahead and look that up as well. So back to the case study, there's some additional details I want to know about the risks before I continue. Being able to anticipate the questions asked by the carrier when I'm quoting is going to be the difference between you and another broker. So a few things I'll look for on the app is if there's a subcontractor exposure. Most of our carriers can quote up to 25% in subcontracting exposure. Others can go a little bit higher. The business is an LLC, so all managing members can elect to be excluded from coverage. So when you're binding that policy, you want to make sure you have exclusion forms for each of the officers. Next, I'm looking at their physical locations. They have 2 in California. So I want to make sure both of those are listed on the app. And then their employees and payroll figures give me an idea of where the premium range is going to fall. You'll notice there's a few class codes listed on the payroll section, 5474 and 5482. So there's two classifications for painting, and they're broken up based on the employee's hourly wage. This is really often with a lot of contracting exposures. Carpentry is another one where they do that. So when you're receiving the application, make sure that payroll is broken up by classification. With the contracting exposure, I always require an insured to complete a supplemental application because it helps you understand the structure of the business and a further description of business operations. You can also request the insured's deck page, or they're obtaining a target premium to make sure you're getting a competitive quote out of the gate. One of the most important items to review is the claims history and trade experience. How many years of experience does the owner or employees have? This can be a determining factor when asking for premium savings to be applied to the quote. So our case study, it has 6 years in business, 3 claims resulting in $52,000, and one still open. So based on that information, their experience mod is assigned at 106%, so that's a 6% debit, and we're going to go into depth on that in the next slide. So for contracting exposure that's been around for 6 years, 106 mod is manageable, but it is important to turn things around before the mod gets too high, and then it takes a few years to get back under 100. So once you lose sight of it, it really can escalate. As long as claims are open, more costs can incur and will inevitably increase the mod. So getting that open claim closed quickly is going to help mitigate further debits on the policy. So one strategy to present to the insured is offering loss control carrier services. The carrier will help the insured come up with a plan, meet with management to get that experience mod and claims closed quickly. So if the insured has a higher mod, 106 is still manageable, but it's still something I would recommend to the insured, especially when you're binding the policy with the carrier. Other additional information you can gather is if the injured employees are still working for the business, have they implemented any safety training or measurements since the claims occurred, what does supervision look like, is there personal protective equipment used? These questions are likely going to be asked by the carrier for those businesses that have a poor experience mod. But it's going to be helpful to you because with that additional information, you can maybe go back to the carrier and request additional credits because the insured is making an effort to turn things around. For the underwriting information outside of the standard application and physical loss runs, you should always be requesting a supplemental application for contracting risks. CID, our website, actually has one that we created. So when you're submitting applications, you can go onto our website and download that there. It's one page, super simple. So having a full understanding of the business makes all the difference when you're analyzing and submitting risks to the carriers. We do have a few questions. So how long does it typically take to issue a policy from the time of application? So once you bind the policy with the carrier, it typically takes 2 to 3 business days. The carrier needs to activate the policy, create their billing portal, and then they'll issue the policy out. So it isn't long. And the second question, how to become an expert at reducing X-mods. So like I mentioned, getting that insured in contact with a carrier that does offer loss control services is a really good way of helping to reduce the experience mod. It's a rolling figure. So if the insured were to start now and get that claim closed, they likely wouldn't affect the experience mod for maybe another year or so. So getting in front of it is always the best practice. Again, asking them you can get them set up with the carrier, of course, for loss control services, but as their agent, also having conversations with them throughout the policy term, making sure what does management look like, making sure safety procedures are in place, all of these things, having open dialogue with the insured is going to be helpful in making sure that their experience mod stays under 100. So once the policy is bound, then it's important to be in constant communication with the insured so you're aware of any payroll or location changes occurring midterm. So if the insured has a payroll change and it's not endorsed onto the current term, it will be accounted for at the final audit, and this payment won't be spread out. Whereas if you were to endorse payroll midterm, it would be spread out evenly amongst the remaining payment installments. And secondly, if a claim occurs, and let's say the business added a location, a third location, and they didn't let me know, and a claim were to occur at that third location that's not listed on the policy, it's not going to be covered by the insurance company. So it's really important to make sure that payroll and location is always accurate throughout the term. If an insured hires a new employee that's performing duties outside of how they're written, you need to make sure to communicate that with your agent beforehand so that way you can make sure you're getting the proper classification and payroll added. So let's say this business decided to hire an employee performing roofing work. Our current markets would not be able to cover that class. So due to the material change, they would receive a non-renewal notice. So it's important to try and, obviously avoid that at all costs. So making sure that your insured is letting you know prior to hiring any employees is helpful. So that way you can try to place it with a different carrier or figure out a solution for them. So I'd recommend checking in with your insured every 2 to 3 months just to make sure everything's up to date and accurate. Many contracting risks require waivers of subrogation for jobs they're performing. There's 2 types of waivers, blanket and specific. Our contractor's supplemental application actually has a section inquiring if the contractor needs a waiver. So when the renewal approaches or when you're binding the policy for the first time, you want to make sure to advise the carrier if they're adding a waiver. Ownership changes are where I see a lot of confusion. So when an ownership change occurs, either partial or majority, it's important for that information to be communicated to the carrier and the Workers' Comp Rating Bureau. So ownership changes, they're not a simple process. We must submit the change to multiple parties, so it's very helpful to be aware of the ownership change prior to it occurring. Sometimes, a lot of the times we aren't notified 7 or 8 months after the ownership change has already occurred, which can pose a huge problem when it comes to audits. So when an entity or ownership change happens, an updated accord application, a 601 form, and depending on the entity, updated exclusion forms are going to be required to be completed. So you would have to submit all that information, and then the carrier and the rating bureau process the changes. So there's a lot of parties involved, so it's important that you're getting in front of it rather than chasing all of this information down from the insured after they've already completed their change. So next is the renewal process. So it's preparing for that upcoming renewal term. Renewals actually happen before the insured begins their final audit on the expiring term. Our office practice is beginning the renewal process 60 days out from the effective date. So we're gathering updated information like payroll, officer exclusions, location changes, and remarketing the account to outside carriers. At 30 days, sending your renewal proposal, and then a reminder at 10 days. So when you're working renewals, you should be considering all changes and exposures. So make sure to touch base with your insured. With our painting exposure, I'm checking in regarding any material changes or subcontractor exposure changes. The best way to do this is having the insured complete an updated Accord 130 prior to the renewal so you have the most accurate information. So when you're working the renewal 60 days out, This is going to give you and the carrier enough time needed to make the appropriate changes prior to the quote being released. In the case that updated information is not submitted to the carrier will issue the quote based on the payroll from the previous term. Businesses are usually unaware that a payroll change can take up to 3 to 7 business days. So having information from the beginning, it eases the process for you and it gets the quote to the insured quicker. So it's important to inform your insured you're remarketing their account at the renewal to find the most competitive quote from them. And you're paying attention to the insured's experience mod and carrier history as the renewal gets closer. Like I said, the 106 mod that our case study had is okay, but I definitely would be checking as the renewal approaches to see if there's been any changes, if it's gone up or down, so I can prepare the insured. And this way you're able to anticipate any changes in premium as well. And with that, you want to, if you are remarketing and you're taking the account elsewhere, making sure that they also have loss control services if that's something that the insured like, any risk management tools, anything that gives you a competitive edge over another broker. And lastly, the audit. So from an underwriting perspective, audits are where I see the biggest problem. It's important for you and your insured to know that all work comp policies are subject to the premium audit. There's no exceptions. So when the policy renews, the previous term is not done at that point. That's a common mistake with our insureds. They'll have an audit that has to be completed for the expiring policy, and it just won't get completed. So the audit's going to determine if the payroll and exposures were accurate throughout the policy term, which is why midterm endorsements are important to make throughout the policy. Otherwise, the insured will owe that money at the time of the audit. There's 2 types of audits, voluntary or physical. So physical audits is the insured's going to receive a letter requesting payroll records for their company. And once those documents are submitted to the carrier, a representative will contact the insured to either visit their business or conduct a conversation over the phone. Voluntary audits, you'll see those with smaller risks. Those are just completing a audit paperwork. It's about 5 pages long, and it lists the documents and information required. You can expect most contracting risks to be assigned a physical audit due to their high exposure. So the biggest confusion with audits tends to be any insured who's using subs. So when you're submitting audit documents to the carrier, the insured will also need to provide each of their subcontractors certificates of insurance. For contracting risks, HOAs, even property management businesses, subcontractors are often utilized. For example, we recently had an insured try to dispute their audit because their subcontractor's payroll was included in their final audit. But when I asked the insured to send me certificates of insurance for their subs, so that way they could be removed, I noticed 2 things on them. The workers' compensation portion was not included, meaning that they didn't have workers' comp coverage. And on other certificates of insurance, the subcontractor's policy dates were outside of the insured's policy dates. So you need to make sure that your insured's double checking that all of their subcontractors have their own workers' comp coverage with both requirements before hiring them. That's the only way their payroll is going to be excluded from the audit. So if exclusion forms are not on file per state law officers, they will be included at the officer minimum and maximum payroll. So it depends on the class code whether the officer will be included at min or max. So that's why officers that are eligible for exclusions, it's important that they submit those when you're binding the policy. Their exclusion forms are not backdated, so the date they're submitted is the date they take effect. And then non-compliant and estimated audits, those are released by the carrier after a period of time has passed and the insured has not complied with the audit request. All audit requests are always sent from the carrier to the insured. I get a lot of brokers who come to me saying that, the insured hasn't heard anything, they haven't received anything. Make sure that the mailing address and the email address when binding the policy is correct, because that's the information that the carrier is going to use when reaching out to comply with their audit. So if a policyholder does not complete the audit request, a non-compliance fee is going to be added to the policyholder's initial estimated annual premium based on the specific rate for their state. So non-compliance fees I've seen $7,000, $16,000. They can really get up there. So it's just important to, avoid that and help your insured comply with the audit from the get-go. They're really a simple requirement once you get the hang of it, and if you get the insured to comply right away, it avoids a lot of issues. So you don't want to let this slip away or put it on the back burner, because it can be hard to get that back on track at that point. And our life cycle takeaways. So there's a lot of moving parts when you're building your book, binding, renewing a policy. You want to pay attention to all of that. I know it can sometimes feel a little bit overwhelming, but if you have a plan in place, and the more you bind policies, the more you get in the hang of it. Communicating with your insured throughout the policy period to confirm changes in exposures. Like I said, maybe check in every 2 to 3 months, whatever is best practice for your agency, but making sure that any changes that occur within the insurance business are being addressed and they're letting you know. And then you want to treat workers' comp renewals like new business. All the effort and underwriting you do to bind a new business policy, you should still be doing with your renewals. Renewals, it's the easiest to slip away. You think you have the policy already, so you're just like, okay, well, I'll let it audit renew, or I don't need to do as much underwriting or maybe remarketing. It's those moments where the policy just gets slipped away and it's taken to another agent. So making sure you're putting all of your underwriting knowledge to use and making sure you're presenting the most competitive renewal quote will ensure that you keep your business on the books. And then remember, the policy period, it's not over until the audit is completed. So once the policy renews, that expiring term, it's not finished yet. The insured is going to receive an audit notice directly from the carrier with the requirements for completing their final audit. So make sure you're letting your insured know to look out for that. And if any changes need to be made with the contact information on file, the insured can do that directly with the carrier, or as the agent, you can reach out to the carrier and help them with that. And that is all. I'm going to give it back over to Anae.
Thank you, Darby. That was really invaluable information. I hope that it will be of great help to all of you that have joined us today. So I want to make sure that you've got Darby's email address and phone number, and she's very responsive. If you have questions or you want to know how to get the information for the application, or whether we would be able to write a risk for you, please contact her. She's very responsive. We answer our phones and we answer our emails. And then here's where you want to submit your applications to. You could also copy Darby on those as well, so she can get to it right away. And make sure, if you haven't, visit our website, cidinsurance.com, and we've got lots of tools, broker tools, templates, marketing pieces that you can customize, and of course, we've got lots of recorded webinars on coverages and classes of business that can be really helpful. They're all, within 30 minutes, and we also have some videos on there that are 3 to 5 minutes. So if you just want a little update on some particular coverage, you can get that also on our website. And check out our upcoming webinars and join us for those as well. So thank you again. We look forward to doing business with you.